Welcome to day 2 of the RedChip Global Online Growth Conference. We have another 6 companies presenting for everyone today. Our first company up will be iGen Networks. Ticker symbol is IGEN. We're going to actually be doing a TV interview with Neil Chan, the CEO, and we'll be playing that first, but we will be going into a live Q&A session once that concludes. And I want to remind all of our viewers, if you have a question for any of our presenting companies today, just click the question box, enter your question, select which company it's for, and we'll answer those in the time that we have available. And of course, any companies that are interesting to you, you can always sign up for news alerts right here on the presentation page to stay abreast of all the latest developments. And with that, we'll get started for today. Again, our first company up will be iGen Networks, ticker symbol IGEN. And this will be initially a TV interview we're going to play from Neil Chan, CEO. And then we'll move on to a live Q&A session. Thank you again for joining us today.
Neil, thanks for being with us today.
Thanks for having me.
Now, most people are familiar with LoJack and its stolen vehicle recovery system. As I understand it, iGen Networks, through its wholly owned subsidiaries, marketing a product to new car dealers that bundles a better stolen vehicle product with a proprietary software platform. Tell us what differentiates your product from LoJack and explain how large the overall market is.
The market that we're focused on is the new car market. As you know, it's really the next trillion-dollar industry that everyone's chasing. But to address your question regarding LoJack, LoJack is a stolen vehicle recovery service that was established back in the 80s. And our technology is very much based on, I refer to as the Uberization of the consumer automotive industry. meaning our technology connects the asset of the vehicle much more closely to the consumer themselves. We're in a shared economy like Uber. You wonder why Uber is the largest taxi cab company in the world without owning one single taxi? That's because they connect the consumer directly with the service provider. And that's essentially what we do relative to the LoJack service. We connect the consumer directly with the vehicle. So anybody that moves the vehicle, tries to steal it, or what have you, is instantly alerted. Whereby in the traditional LoJack solution, as you're probably aware, there's a long drawn out process to finally identify the vehicle.
Neil, talk to us about your business strategy. In doing that, talk to us about the financial model. How do you make money?
Well, we make money by activating, or what we refer to as preloading, the vehicles as they arrive at car dealerships. So the device and the software is activated, and when the consumer purchases the vehicle, they're given an opportunity to purchase the stolen vehicle recovery service, or what we refer to as the Platinum service, a 24-hour roadside assistance program that's augmented with our software. And the consumer then typically purchases the first year of service, and on an ongoing basis, we have a renewal service that's made available to the consumer.
You know, investors want to know that your business model is sustainable. So talk to us about your current financial position and why this model is sustainable.
You know, what we have discovered in the new car channels is close to 75% penetration in the new car channels, which is quite amazing, actually, in the short time that we've launched the service. Our business continues to grow.
Neil, you had a major announcement on March 8th. It was the largest order in the company's history for 12,000 vehicle activations. Tell us more about this agreement, and is this a trend? Are we going to see more of these big agreements for this technology?
Well, we believe so, based on the recent penetrations through the franchise channels. The 12,000 unit order that we recently received was actually the second one in 2 months in terms of orders that we have received through our partnership.
Now, you have a strategic partnership with Verizon Wireless that allows you to access a huge sales organization. Tell us about this relationship and what it means for you in the long term.
Well, the relationship we have is quite unique in the sense that essentially we share the sales leads for our services. So when the Verizon salesperson identifies an opportunity that may be interested in our services through the various dealers across the U.S., those leads are shared, and quite often we work together on pursuing that opportunity. Just to give you an idea, with Verizon working with us and us pursuing opportunities with them, our distribution channel is enhanced quite significantly. And the recent orders reflect that.
AAA is probably the most widely known name in providing roadside assistance services. How do you compete in that market? How does your product and technology and your overall package compare?
We actually don't even compete with them. We augment the 24-hour roadside assistance programs with the partners that we have today. One of our partners is Fortegra Financial, that is I guess a AAA competitor, but we augment the 24-hour roadside assistance program by providing software that they can bundle with the service. And to give you an example, with our software and the vehicle activated with our device, think about a scenario where you get an alert on your battery before the battery is dead, as opposed to waiting till you can't start the car and then you're asking for help. So that's a basic example of how our software augments a 24-hour roadside assistance program like AAA. So I actually would like to pursue them as a potential partner so that they can offer the service to the dealers and the consumers.
In our discussions, you've used the term Uberizing the industry. What does that actually mean for iGen?
You know, the word Uberizing doesn't exist, actually. You can look it up in the dictionary, but it does conjure up the concept of Uber being the largest taxi cab company in the world. And why is that? Without owning one single asset. And that is because they've been able to connect the consumer with the service provider, the driver. And that, what does that do? We're talking about a shared economy. We're talking about an economy that connects the consumer directly with the service provider. And we're talking about convenience. For us, our vision at iGen is actually creating peace of mind for the consumer and their families. I.e., if you know that your kid is speeding in that car and the kid knows you will be receiving that alert, that changes their driving behavior, as an example. So when we talk about Uberization of the consumer automotive industry, those are the areas that we're covering. And those are the ways that we differentiate ourselves from, let's say, some of the legacy services that existed before.
What corporate milestones can investors anticipate over the next 6 to 12 months?
Well, I've made it quite public in terms of what our game plan is. We will continue to make acquisitions to grow our business. Technologies that are complementary to us, channels that are complementary to us. And I've always emphasized that it's very important for us to execute. We have great partners between the Verizons and the Fortegra Financials who offer us the background services. Now it's time for us to really grow our channels and to continue growing our business.
I'll note that CalAmp Corp recently agreed to buy out all the outstanding shares of LoJack for about $6.45 per share. Do you believe iGen could develop into an acquisition target, or if LoJack shareholders might consider looking at your stock as a good growth play?
CalAmp has traditionally been a hardware supplier. As a matter of fact, we purchase hardware from CalAmp. And as you know, LoJack's really strength, and it's been made public, is their relationships with the dealer channels across the U.S. over the many years that they've been operational. But in my view, there is a very important aspect to the Uberization of the consumer automotive economy, and that is the software platform, is the services. We are a software service provider. That's our emphasis. And I believe that is an area that brings tremendous value to companies that are looking at consolidating in the industry. And that's our core competence. We do add and fill a significant gap in terms of the industry and what we believe the industry will need. Whether we're an acquisition target or not, that frankly is not on my radar.
Neil, in summary, what is the essential value proposition? Why should investors consider owning your stock today?
This is a very complex industry. It has a very unique culture, and I'm referring to the car dealerships, the franchise dealerships, and even the pre-owned dealerships. The automotive industry is very complex, and creating value for the consumer, compelling enough that they pay annually for that service, requires a team that has a vision, a team that has done this kind of thing before, and has been successful in growing a business and really leveraging technology and being ahead of the curve in terms of innovation. And I believe iGen Networks Corp and my team fits that picture.
Neil, thanks for being on the show. We look forward to following your company, and we'll have you back soon.
Okay, we're now ready to open up the line for our Q&A session with iGen Networks, ticker symbol IGEN. And with us today for the Q&A, we have Neil Chan. Welcome, Neil.
Thanks very much for having me.
It's a pleasure to have you. A lot of great things going on. We'll jump right into our questions. Our first question, what are the main industries that you're targeting with your technology?
Well, the main industry that we're focusing on is the consumer automotive segment, which, as most people are aware, it's really the the next trillion-dollar industry in terms of the next 5 years of growth. Specifically, we're focused on the franchise or the new car dealer channels, the pre-owned dealer channels, and consumer fleets.
Thank you, Neil. And you were talking about the dealership channels. Can you talk a little bit about what your sales and marketing strategy is for targeting the car dealerships?
Yes. You know, the products and services that are targeted for the consumer are sold through what's referred to as the F&I channel in the dealer channels. And usually that's the last sales guy that makes contact with the consumer before you drive off of the car. So we create compelling services like our stolen vehicle recovery service and augmenting our roadside assistance programs with real-time software that the consumer can use. But in addition to that, providing services for the dealer to sell and essentially to grow their revenues, the value proposition for us is to make it compelling for the dealer themselves to activate and use our platform, because we connect the consumer directly with the dealer on an ongoing basis. And as you're probably aware, one of the biggest issues with dealers across the United States is that consumer engagement over the years after they've purchased the vehicle. So we do two things. One is we create more products for the dealership to sell through their F&I channel. And secondly, we create a compelling solution for the dealer that enables them to continue to re-engage with the consumer right through the service period, the maintenance period, that is very, very important to the dealers in terms of ongoing service revenues for the long term.
Thank you, Neil. Now, can you discuss some of your major partnerships and how these partnerships are allowing you to access new customers?
Absolutely. The one of the key partnerships for us on the channel side is an announcement with the Verizon Wireless as the carrier, and that relationship enables us to work with the Verizon sales team in selling our services to the dealer channel. So that is one of our key channel relationships. Secondly, we have a long-term strategic relationship with Fortegra Financial, which is a multifaceted insurance company providing the call center and roadside assistance programs that we augment our software with. Those are the two key partnerships that we've announced in the last several months.
Very good, very exciting. Can you now talk a little bit about the Nimbo fleet provides and how it provides superior solution for small commercial fleets? And what's the market opportunity in this area?
Well, this is a really interesting segment in the industry. My background is in fleet management, one of the earlier companies I was involved with. And one of the things that we sold to was really the larger fleets, the Federal Expresses of the world and so forth. But one of the things that we left on the wayside is actually 70% of the commercial fleets, which really make up the smaller fleets, and I'm talking about probably 250 vehicles or less, make up the industry in the U.S. and actually in North America as a whole. And that 70% though is very cost conscious in terms of the services, and their needs are very different from the larger fleets. So when we developed Nimbo Fleet, the emphasis was on providing a very cost-effective solution that the fleet owners could provision themselves. We've taken advantage of the fact that we have developed solutions for the consumer segment, making it easy for the individual consumer to activate the service and to renew the service on an ongoing basis. We've taken what we've learned in that consumer space and applied it to the Nimbo Fleet concept, whereby there's no reason why a fleet owner could not subscribe to our service. We ship a unit over to them. They install it themselves. They just plug it in like our consumers do and turn on the service themselves at a very, very cost-effective rate that is compelling for the small fleet owner. And that's really the key differentiator of Nimble Fleet.
Great things to hear there, and look forward to hearing some more progress on that segment as well. We don't have any further questions that have come in from the audience, but I guess here's some of the remaining time. There was a lot of great information that was covered in the interview that we played and here in the Q&A session. So I guess in summary, what's the key takeaway investors should have about the IGN Network story?
Well, I think the key takeaway is that IGN is really focused on a segment where, and that's the consumer automotive segment, where in the next 5 years, our cars are going to be a heck of a lot more connected and intelligent, in the sense that there's a lot more information that those vehicles are going to be collecting. And IGN's mandate is to collect that information on behalf of the consumer and create some compelling solutions that they would pay for on an annual basis or renewal basis. But essentially, that's the segment that we're focused on, and we expect that it will be the fastest growing segment in the consumer automotive area. And IGN will play a very key role in the analytics of that industry, collecting meaningful data and solving some specific problems and creating compelling solutions for the consumer that connect their car much more closely to them as the owners.
Very good. Thank you, Neil. And thank you for joining us today and sharing some more of the IGN Network story. I want to remind our viewers, if you'd like to keep abreast of all the developments of IGN Networks, you can actually sign up for news alerts right here at redchip.com. And that way, as new developments happen, you can get the latest news as it hits. And we're going to be moving on to our next presentation in a few more minutes. Up next will be Osmia Pharmaceutical, ticker symbol OASM on the NASDAQ. But again, we were just watching an interview with Neil Chan, CEO, and we just had a live Q&A session with him as well. And this was again with IGN Networks, ticker symbol IGEN on the OTCQB. And again, up next for the presentation schedule today will be Osmia Pharmaceutical, ticker symbol OASM, and that will begin at 1 p.m. Eastern. Thanks everyone again for joining us. Thank you everyone again for joining us today for the day 2 of RedChip Global Online Growth Conference. Sorry, I had a little technical error there, but we're now ready to move on to our next presentation for the day, and that's Osmia Pharmaceutical, ticker symbol OASM on the NASDAQ. We're going to initially start with a quick 2-minute introduction video on Osmia, and then we're going to move on to an actual presentation from Julian Alexoff, the Executive Chairman, and then we'll open up the line for Q&A. So if you do have a question, click the question box, enter your question, and we'll get to those in the time that we have available. And with that, we're now going to move on to Osmia Pharmaceutical.
We are a a very late-stage company. We have a unique validated platforms, which we have done through all the clinical trials. We are focused in a segment which is growing very fast in the pharmaceutical industry. This is oncology, and especially novel chemotherapeutic formulations are very largely used in the world, and they have very limited competition. So with our technique to enter the market with better formulations in first and better patient convenience is a very interesting thought. Thank you so much. My name is Julian Alexov. I'm a Chief Executive Chairman of Wasmer Pharmaceuticals, and I'm very happy to be here today. So I would like to start with moving to slide 2, which is our first presentation, a short presentation of our company. We are 8 employees located outside Stockholm in Sweden. We have been listed on Nasdaq Nordic since 2010, and since October last year at Nasdaq New York or US. We are focused only on oncology, specifically chemotherapeutic novel formulations. We have 2 business fields. The main one is, of course, human health, and we also have a small US division when it comes to companion animals treating cancer in dogs, which I will come back to. Please move to next slide. So the heart and base of Wasmer Pharmaceuticals is a technology platform called XR17. XR17 is a novel molecule developed here in-house. The uniqueness with XR17 is it can, in a very efficient way, transform insoluble compounds or established older drugs into water-soluble, solvent-free formulations. It's very low toxicity, and also very well patented during all this development work until 2030. Next slide, please. So the difference between XR17 and the established so-called excipients or drug delivery systems today on the market is that those which are today established on the market are somehow pre-engineered and containing solvent, making it possible to create a formulation for intravenous use. With XR17, the high inventive step is that once you add water to the final product, it creates itself instantly, naturally in a micellar water solution form. And this also makes us XR17 have some advantages in when it comes to patient convenience. There is no pre-treatment needed. We can increase the doses, and we can also today, since we have also presented clinical data on healthy volunteers in a human trial, recently presented, the oncology field, we can also use the excipient outside in other therapeutic areas, which we think is very exciting. Next page, please. So during the years of development, we have divided the development of XR17 in 3 categories. The first one is, as I mentioned, we can handle insoluble compounds. And on this slide, the first part is as examples which we have worked on during this year. The second development stage was during this period was we can also handle water-soluble compounds, meaning that we can handle compounds and make them slightly less soluble and end up with a different kind of formulation, which still is water soluble, but for example, with 20, 30 times larger particle size. The third development, which is one of the most exciting for us, is that we can also, with XR17, combine a water-soluble compound and an insoluble compound in one formulation without changing their characteristics. And this is especially interesting for us because since the majority of all cancer treatments today are combination therapies, and this is something which increases all the time. So I think that the potential for using this technique in the coming 3 to 5 years, making it easier for combination therapies to be administered for patients. Instead of being 1 or 2 days in hospital, they would only be a few hours. And I think this is something which is extremely exciting for us. Next page, please. So before I go on to our product portfolio, I would like to discuss, I would like to inform a little bit about our oncology market. Still today, the oncology market is the biggest segment in the pharmaceutical industry, passing over $100 billion per year. But still, 25 years later, if I can say so, chemotherapeutic drugs are representing over $40 billion of sales. And many of those, big part of this sales is today generics. There are very few novel patent and new formulation replacing these old chemotherapeutic drugs. One of the most successful, of course, in this segment is Abraxane, marketed by Celgene. And we believe that with our product portfolio, we have a very interesting and significant potential in coming into this market, which needs new, better developed chemotherapeutic formulations. And I believe that our product portfolio with the XL17 technology is excellent for this business opportunity. And this is something which we really are keen on, and to come in with the 3-4 major chemotherapeutic drugs today with novel formulation and replacing existing markets. Next page, please. So the Wasmia pipeline. So we have, based on this XL17 technology, developed this pipeline, which is divided between human and veterinary use. Of course, the main field is for us human. And our most advanced product above here is Paclical or Apelea, which is the European and US name, has been developed. We performed a phase 3 study, and we have today received market approval in Russia and CIS countries, and we have submitted to the European Union this year, 8th of February, for marketing approval. And we expect in the near future to have overall survival data, which is the base of our US application as well. Our second priority in our pipeline is, of course, a novel formulation of Taxotere, which is today one of the world's single most used chemotherapeutic drugs, named Taxotere. We have initiated a clinical program, and with a novel formulation, which is fully water-soluble as well as Paclical. And our strategy here is, as soon as possible, within the coming 3 to 5 years, to enter the market with this second product, which is a very important step for Wasmia, since we couldn't be number one with the first product due to our competitor Abraxane. But we are keen to achieve that possibility with Doxecol, as the product is named. And our third product in the pipeline is a novel formulation of doxorubicin, which we call Doxophos. And we are currently under different clinical development stage, but we have submitted to the Russian CIS countries January this year as a hybrid, meaning an improved generic version of doxorubicin, which we expect to receive market approval in end of this year. When it comes to the animal health division, we have two drugs there. The one which is approved in 2014 in US, his name is Pacalvet. Pacalvet is identical as the human drug, but with a different label. And the second product is Doxophos Vet, which is also under development. And we expect to have our clinical trials ended during this year, and then submit for FDA approval beginning of 2017. Next page, please. So some short background regarding Paclical and Apelea, our most advanced product, which I mentioned. So today, as you see in this slide, our competitor Abraxane is the one which is registered and marketed worldwide. The second product in the market is Paclical Apelea. The products are very similar. They have the same dose. The main difference between Paclical and Abraxane is that Paclical has slightly a more high inventive step since we use a novel technology, and is fully water soluble and solvent free, which is not exactly the case for Abraxane. But otherwise, the products are very similar, and we have also showed in clinical trials that there is no difference when it comes to PK data for both of those drugs. Next page, please. The second product, which is a very high priority, as I mentioned in our product portfolio, is Docetaxel, a novel formulation of Taxotere. Here, as you see, we have a similar approach. Taxotere is an insoluble compound, which we have now reformulated in a water-soluble solution with the same concept, which we will follow with this product as we did with Paclical, but of course with the intention to reach the market as the first player. Next page, please. So some short information about our phase 3 study for Paclical, which is of course the base of all submissions or all approvals which we have got until now. So the study was done in ovarian cancer with patients second and third line in combination with the carboplatin against the standard treatment today, which is the generic version of paclitaxel in combination with carboplatin. The trial was finalized slightly more than 2 years ago. Based on the response rate, we filed for the Russian authorities and received market approval in April 2014 and launched the product in the region in November last year. Second data, which was progression-free survival, which we announced last year. Based on this data, we submitted to the European Agency February this year, and we expect to receive market approval end of this year for that region. And we are expecting in near future overall survival data, which once we have those, we will base our US submission on this clinical endpoint as well. Next page, please. So to summarize our regulatory timeline is that based on those clinical endpoints, which I mentioned earlier, we expect to have a market approval and launch in 2017 in the European region. And we also expect to receive beginning of 2018, end of 2017, US market approval for Paclical as well, or for Apelea. And we already have, of course, as mentioned, since November, we have launched the product in Russia and CIS countries. In addition to that, of course, once we get the European approval, we will also continue to add other geographic areas outside Europe as well. Next page. So having had a short presentation about our human division, we have, as mentioned, even a veterinary one, which we today are the first one out there with the first registered chemotherapeutic drug for treating cancer in dogs. This is a new market, extremely high potential. It's over 80 million dog owners only in US. We know that 1 million dogs per year are diagnosed with cancer. We know that there is only a few clinics today which treat cancer in dogs. And today, general practitioners don't treat cancer in dogs. So our main mission here is, since October last year, is to develop a marketing strategy and a new cooperation with in US to market and build up this market within the coming 2 to 3 years. So we believe that this is it's a very good asset for Wasmia, and the potential worldwide, even not only in US, is extremely interested. And we think it will take 2 to 3 years until real sales are coming for the company. Next page. As mentioned before, we have one drug which is approved by FDA, and then we have a second drug, doxorubicin, which is under final development. But we have got a special status from FDA, meaning MUM status, that we can register or get this drug approved since the need is out there on a conditional approval. And this is something which we will aim for. So with those two products and with the right concept and the right marketing strategy, we believe that we will be able to handle the majority of cancer treatments in dogs in the coming 3 to 5 years. So finally, next page, what is the main interesting part of Wasmia? We are a very late stage company. We have two solid divisions which are very focused in oncology with limited competition. We are in a commercial phase, having revenues. So it is a very interesting time coming up here, the coming 1 to 2 years. And we believe once we enter more regions, the real potential from the business point of view is extremely high in Wasmia. And we are very comfortable with our technology and also with new upcoming opportunities and cooperations with other companies using the platform as well. So we think that we are a really interesting moment after 16 years. Next page, please. So as mentioned, milestones, of course, due to all this late-stage clinical data, market approvals and launches. Of course, the coming 12 to 18 months is very important, and there are many exciting milestones coming up, especially when it comes to revenues with partner negotiations and clinical data and so on, and market approval. So we have a really interesting news flow coming up for the coming 12 to 18 months. Thank you so much. Now we can have the Q&A.
Okay, we're now opening the line for our Q&A session with Osmia Pharmaceutical. The ticker symbol again is OASM on the NASDAQ. And with us for the Q&A, we have Julian Alexov, Executive Chairman. Welcome, Julian.
Thank you.
Our first question, can you discuss the recent overall survival rates from your phase 3 clinical trial?
Yes, the data was expected in that sense that our aim was to confirm, and this was also the design and the design of the whole study, to confirm the earlier progression-free data which was announced, and that Paclical is in favor of that in comparison with the standard treatment with Taxol. So we achieved those clinical endpoints, and we're satisfied with that.
Thank you, Julian. You just mentioned Paclical. Can you talk a little bit more about the sale that you announced of Paclical last year in the Russian Federation? And also, what's the overall market opportunity for all of your therapies in Russia?
No, first of all, the order, which was the initial one, was for the first part of this year. And since we are in the launching process and this is a hospitalized product, so the sales is focused on the different hospital regions, which are 52 in Russia, and this is marketed through our distribution partner in this region. So, I mean, Paclical is one of the first products which are registered in the state reimbursement list, since it's a standard treatment for cancer. So, I mean, it's a very good opportunity. Of course, it's the market is smaller than US and Europe, but it's a very growing market. So we think that the opportunity is between 60 and up to $100 million US dollars alone in Russia. And overall, of course, the market is over 2 billion, and the main product which today is our competitor, only one competitor in the world, is Abraxane, marketed by Celgene, which is almost 1.3 billion per year. So it's a significant market, limited competition, and our aim is, of course, to reach 25-30% of that global market in respect to Abraxane. Yeah.
Very good. That's a sizable market opportunity, to say the least. Can you talk a little bit about your XR17 technology and just give a little bit more color on that and the overall market potential with where you can apply that technology?
Yes, one of the more important milestones we announced here last month was that we finalized the clinical trial in humans only with the XR17, showing that there is a 100% safety in that technology and to be used as a drug delivery component or excipient. So, of course, the potential is very significant, since the majority, or more than 60% of today's R&D pipeline and within the pharmaceutical industry have solubility problems. So now with this clinical data and all previous data which has been done, the platform is validated in the level that it could now be used and discussed for other parties to license the platform and also use it on their own novel molecules or products which have have solubility problems which are registered and maybe reaching the end of their patent life, and to be reformulated. So we think that this is a very solid third leg for Oasmia besides the human and veterinary oncology, and we are looking forward to find partners.
Thank you, Julian. Our next question: what is the significance of hypersensitivity when it comes to treating cancer patients?
Now, the hypersensitivity is due to the formulations. First of all, insoluble compounds as Taxol and so on have two things. One is that the chemotherapeutic agent itself gives hypersensitivity reactions due to if the infusion time is too fast. Secondly, if it's not a water-soluble solution, you add a lot of other components which the patient needs to be pre-treated. So this is a convenience which is very important, especially if you have long treatment schedules, depending on what kind of cancer indication, especially in ovarian cancer, which is a very the patients are very ill and the treatment schedules are very long.
Thank you, Julian. Next, can you talk a little bit about Docekal? Can you talk a little about the length of and what the clinical trials ultimately need to be to bring that to market?
Well, we have initiated the clinical program and 2 clinical trials. So we expect to have this concluded within the coming 36 months. So this is a very important and prioritized product for us, since with Paclical or Apelea, we are number 2 entering the market. With Docekal, we are determined to be the number 1 entering with a water-soluble formulation. So within these 36 months, we need to reach the market, starting reaching different markets at least.
Very good. Thank you, Julian. Yeah, no, we have just a little over a couple minutes remaining. I guess in summary, there was some great information that was covered in the presentation as well as here in the Q&A. But for our viewers, can you what's the key takeaway they should have about the Osmia Pharmaceutical story?
No, that we are in a position where, with the product portfolio we have with the XR17 technology, we can enter markets which have a very high value with limited competition, and especially cancer treatments and chemotherapeutic drugs need novel formulation and better convenience for the coming 15, 20 years. So we believe that within the coming 2 to 3, 4 years, we will start to having a position in this segment, which is today almost 40 billion in sales, only chemotherapeutic agents, and most of them are older generics.
Very good. Thank you, Julian. And I want to thank you for joining us today. There's a lot of great things obviously going on, and we very much look forward to having you back in the future so we can hear some updates on the progress you continue to make. For our viewers, we were just speaking with Julian Alexoff, Executive Chairman of Osmia Pharmaceutical. Again, the ticker symbol is OASM on the NASDAQ. You can find quite a bit more information right here at redchip.com about Osmia Pharmaceutical. You can also sign up for news alerts, which is a great way to stay abreast of all the latest developments as they happen. Just enter your information below the presentation window. We are going to be moving on to our next segment, which is actually going to be we're going to be playing a recent episode of the RedChip Money Report. It will feature interviews with American CareSource Holdings, which trades on the NASDAQ under the symbol GNOW. Also, Connecticut Water Services, ticker symbol CTWS, and Southside Corporation on the NYSE market under the ticker symbol CVM. So there will be no Q&A during this segment, but we will be back at 2 p.m. Eastern with our next presenter, and we will have Q&A for that. That's Positive ID Corp. So right now we're going to move into a recent episode of the RedChip Money Report, and we want to thank everyone for joining us again today.
Hello, I'm Dave Gentry. Welcome to the RedChip Money Report. Now, for those of you new to RedChip International, we are a public company listed on the Australian Securities Exchange under the symbol R3D. We are an international investor relations, media, and research firm focused on emerging growth companies. Many companies in Australia use RedChip to gain exposure to investors in the US, Asia, and of course, Australia. Companies in Europe and other parts of Asia also use RedChip International to gain exposure to investors all over the world. Our unique platform combines a global multimedia platform with traditional investor relations, again, reaching a global audience of retail and institutional investors. Now, tonight you'll see interviews with 3 U.S. companies. First, a revenue-producing NASDAQ company consolidating the fragmented urgent care center space. We'll also talk with the largest water utility company in New England and a company in a pivotal phase 3 trial for its lead immunotherapy targeting head and neck cancer. Our first interview tonight is with American CareSource Holdings, an owner and operator of urgent care facilities, rapidly expanding through both acquisitions and new facility build-outs. Note also the insider buying on this stock. Let's go to an interview with CEO Adam Winger. Adam, thanks for being with us today.
Yeah, I appreciate you having me.
It's our pleasure. Your company operates urgent care centers, and I want you to talk to us about your overall business strategy and where you're at today and where you hope to be in the future.
Absolutely. The urgent care market, approximately 12,000 urgent care centers across the country right now. It's an $18 billion industry, and our focus is really consolidating that landscape in the southeast and eastern parts of the country. We plan to grow both by acquiring profitable centers and developing de novo centers around our acquired sites. We've got 11 centers currently. We plan to get to 25 by the end of 2016.
What do the financial metrics look like? What does an average center grow in revenue, and what kind of profit margins do you have?
On a per site basis, we're looking at $1 million to $1.2 million of total revenue with 15 to 20% margins, roughly $250,000 to $300,000 of EBITDA per site.
Okay. What does the competition look like for you?
The competition in our marketplace we view as not quite as strenuous as in some of the other marketplaces, the Northeast and the West Coast. We think there's still a lot of opportunity for de novo growth, and there are also a lot of good acquisition opportunities for profitable, healthy, very well-run centers right now.
So just so I'm clear, you've got 11 centers now. You're projecting you'll have approximately 25 centers in 2016 this year through, and how much of that will be acquisitions versus starting your own?
We're looking at effectively 2/3 coming from new center developments and the other third coming from acquisitions. So that breaks out roughly to 10 or new sites and 4 to 5 in acquired sites.
What does it cost to start a new center?
For us, it costs in between $300,000 and $500,000. And that investment over 9 to 12 months will get us to cash flow break even. To acquire one, we're looking at roughly $1 million to $1.5 million in acquisition costs. And those, we think we can increase the profitability of a quality site by furthering the marketing and advertising. This is very much a retail business that really we want to be top of mind for the consumers in our communities.
I want to talk a little bit about your management team. Unfortunately, 6 months ago, the CEO died. You stepped in. I want to talk about your background and some of your board members, like John Papajohn, for example.
Absolutely. My background, I'm a CPA by trade. I also served as the company's general counsel. I worked through the first 3 acquisitions as an outside attorney, joined the company to really fuel the acquisition strategy. I was the VP of acquisitions and started as a company's general counsel. I moved over with the CPA background, I moved over to the interim CFO role and stepped in with the passing of our former CEO. It took over really last month in January 2016. Our board, we have an exceptional board with just an infinite background of experience led by our principal stockholder, John Papajohn, who has a tremendous track record of growing small publicly traded companies and really having good, profitable liquid exits with 3 to 5 year holding periods. He has prior experience in the urgent care space, and he's really providing the guidance and the leadership from a capital markets perspective that the company really needs right now.
Well, I will note John Papajohn was one of the founders of the first home health care companies, Caremark, which was sold for billions. And of course, investors could have got in at a very early stage. Your company, you raised $7.5 million late 2015. Right now you're trading at a $6 million market cap. Begs the question, are you fairly valued today? And what is it doesn't seem to me that you are at $6 million, particularly on your revenue run rate. And I want you to talk to us about your 2016 revenue run rate and, what you think the real value of this company is.
So 2015 revenue, we were approximately $30 million. And after the disposition of a legacy business in 2016, we're looking at roughly $20 million of revenue from our existing holdings. We think with our additional growth, we will approximate $30 million in revenue. But from the market cap perspective, $5 million to $6 million market cap for a company that's on a $20 million run rate at a minimum, we think it's severely undervalued.
Well, I don't think there's any question about that, and I do think the fact that your former CEO sort of left us unexpectedly, dying, was a shock to the market. You stepped in to sort of absorb that shock. What are the biggest challenges that you face in 2016?
Our core challenges really relate to our ability to continue to raise money. We've been successful raising capital in the past. We have really no indication that we're going to have any trouble with our ability to leverage people like John Papajohn. But we have a great fundamental business strategy in expanding this portfolio of profitable centers that American consumers really have an everyday demand for. It's just, for us, it's about raising the money to continue to fuel the growth at the pace that management wants to.
So what is the essential value proposition today then for investors? I don't have any doubt that if you need capital, you can access capital. And John Papachot himself is worth $600 million. But what's the essential value proposition for investors today?
The value proposition is the entry point for us. We have a trajectory that shows, we think double-digit EBITDA, double-digit profit year over year, trading right now at a $5 million market cap. The value proposition is the arbitrage that's going to come over the next 18 months.
Makes a lot of sense to me, Adam. I want to thank you for being with us today. We look forward to working with you and getting you in front of institutions and family offices and retail brokers. I think you're going to find that you're going to get a very good reception out there in the capital markets.
Thank you, Dave.
Thanks for being with us. Now, to get more information on American CareSource Holdings, visit redchip.com. And while you're there, subscribe to our weekly newsletter. Join the RedChip Nation today. You'll get a plethora of stock ideas on emerging growth companies, interviews, research reports, industry news, and much, much more. It's all free, by the way. Our next interview tonight is with Connecticut Water Service, the largest water utility company in New England. This company pays a handsome dividend and has been around for a very long time and continues to grow. Let's go to the interview with David Benoit, CFO. Dave, thanks for being with us today.
Happy to be here.
You've been the CFO of Connecticut Water Service for 20 years now.
Correct.
So you've watched this company grow. I want you to talk to us about your overall platform and your business strategy.
Sure. Like many utilities, we make money by investing in the infrastructure and providing water service to our customers. We don't make money by selling more water or growing customers. It's that investment and earning a return on and of that infrastructure that allows us to provide returns for shareholders.
Over the last 7 years, you've made acquisitions. You've acquired 40 water systems. Talk to us about how that impacted your top and bottom line, and again, your plans for future growth.
Sure. First, it's interesting to note that the U.S. water industry is particularly fragmented. There are 50,000 water systems across the U.S. In the two states that we have business, Connecticut and Maine, there's over 800 water and wastewater systems. So there's ample opportunity to consolidate. We have the ability to provide capital that many of these smaller systems don't have, and the operational expertise. So that is what we've done. Our largest acquisition has been in Maine. We entered the state of Maine 3 years ago, and by doing so, we've had 35% customer growth, which is leading our industry, and that has added both top line, as you mentioned, but most importantly, bottom line. Both acquisitions have been accretive, and they're fully integrated.
And I believe you're the largest water service company in New England now, aren't you?
That's correct. We service 120,000 customers and 400,000 people between our two states.
You've paid a dividend for, I believe, 46 consecutive years, is that correct?
We've actually paid a dividend longer, but we have increased it now for 46 consecutive years. And we understand how valuable that is, and shareholders really depend upon that.
What would you tell investors today if they ask you, what is the essential value proposition? Why should I position, why should I accumulate your stock?
We have a low-risk, multi-state regulated water utility that really leverages on the opportunity that water utilities have. That regulatory compact that allows you to invest in infrastructure and earn a return on it is really critical. We happen to operate in two states that have some very valuable tools that provide more certainty around that recovery than other states. We do not have to go through a full rate case process to recover that infrastructure investment. We are allowed to put a surcharge on customers' bills and immediately collect that investment, thereby eliminating any regulatory lag. And in Connecticut, we also have decoupling, which is simply a term that means our revenues are guaranteed. If our customers use less of our product, it doesn't impact the revenues that we collect annually.
2016, what milestones might you reach this year?
2016, there's a couple interesting things going on. We were selected by the University of Connecticut, the flagship university in Connecticut, to be their water provider. And we are building a pipeline from our northern division out to the university. And later in 2016, that will connect and we will become the incremental water provider to the university. In addition, you typically in the water industry have periodically what we call generational investments, where you have a treatment plant that needs refurbishing. We will be far along to completing the refurbishment of our Rockville treatment plant later in 2016.
I want to go back to the dividend because I think that's a major part of your value proposition. And again, for 46 consecutive years, you've increased that dividend. What is the dividend ratio today? And again, will it continue to increase?
Sure. Our current payout ratio is in the low 50% range. Our current yield is a little over 2.5%. And we're very careful in increasing that dividend. You never want to be in a position as a utility to go backwards. But on a historical level, that 50% payout ratio is relatively low. So it's something our board gives strong consideration to each year as far as the level of increase. And we've had just a huge growth in earnings in recent years. We've averaged 16% net income growth over the last 5 years. Our dividend is growing at 4%. So that, there's ample opportunity to look at the rate of that increase and potentially increase it going forward.
Who are your competitors?
In our industry, there's not competition as you might expect in other industries. We have the advantage of being the only publicly traded water company in Connecticut, which is a huge advantage when it comes to acquisitions. We can use our equity in a stock-for-stock transfer that other potential competitors can't. So in many ways, we don't have a lot of competition in that area.
In closing, what is the final thought you would like to leave with potential investors today?
Well, I would emphasize that for investors that want a low-risk, diversified, multi-state regulated utility with a consistent record of paying a dividend that's currently trading at a discount to its peers, they should consider Connecticut Water. I really think it's amazing. We have 270 dedicated, passionate employees who every day go to work committed to providing life-sustaining, high-quality water service for families and communities, while at the same time looking to provide a fair return for shareholders, and that makes us a unique company.
That's well said. And I'll add that you're trading at a forward P of about 18, and you're right. You are undervalued in your peer group, and I expect that to change this year.
Great, thank you.
Thanks for being with us.
My pleasure.
Now, to get more information on Connecticut Water Service, visit redchip.com. And while you're there, subscribe to our weekly newsletter. Join the RedChip Nation today. You will get an abundance of ideas on emerging growth companies from all over the world, interviews, research reports, fact sheets, industry news, and much more. And it's all free. Our final interview today is with Cellside Corporation on the New York Stock Exchange under the symbol CVM. The company's lead investigational immunotherapy, Multikine, is in a pivotal phase 3 clinical trial for the treatment of primary head and neck cancer. Let's go to an interview with Garrett Kirkston, the CEO. Garrett, thanks for being with us today.
Thank you, Dave.
Now, you have a very unique and innovative technology for the treatment of head and neck cancer. I want you to talk to us about this technology, how it's different, and where you are in this phase 3 pivotal clinical trial.
Well, actually, we see it as being applicable to most cancers, but we're testing it on head and neck cancer because it's such a miserable disease. There's been so little progress in decades. The idea is that the immune system has a place in the treatment of cancer. In the last few years, that idea has very much caught on. We were one of the earliest proponents of it, but we take it a step further. Every cancer drug development happens in patients who have failed surgery, radiation, and chemo. Think about it. What does your immune system look like then? It's destroyed. So do we really think that an immune system drug is now going to fix everything? We don't think so. We think the best way for an immune system drug to fix something is while your immune system is still relatively healthy. So we are the only ones in the world, it's never been done before, giving our medicine right after diagnosis, while you still have a healthy immune system, before you get your surgery, radiation, chemo. And the goal is to give you an increased chance of survival. Basically, if your tumor doesn't come back, you could die of something else, but you're cured of the cancer, and that is our goal.
So part of the technology and the uniqueness of it is that you're using the immune system to help fight the cancer with your treatment, correct?
That's correct.
Okay.
Yes.
Now, right now, you're in a phase 3 clinical. You're enrolling one patient a day. I think you're up to over 100 patients, correct?
It's even better. We are up over 700 patients. It's already the largest phase 3 study in the world. And look, it's very simple. You have a new idea. This idea essentially runs counter to established pharma interests. Pharma makes an enormous amount of money of dying cancer patients. We want to give you a chance of a better outcome so you never become a dying cancer patient. That is why this is the largest study. That is why we focus on head and neck cancer, where there's been nothing in 50 years. And that is why overall survival is the endpoint.
And how long is the trial, and when do we start seeing some data?
This is like being pregnant. Either you're pregnant or you're not. So there really is nothing in between. Either we show a 10% improvement in overall survival or we do not. And so we can only estimate, because we don't even know the number of people who have died in the study. We hear from the doctors that things are going well. We hear that they're happy to enroll, and the enrollment is increasing. The CRO invested more money because they would only get that back from the sale of the product. So everything looks good, but we don't know. So we estimate it's maybe another 2 years. It might be a little longer for us to know. We need 300 people to die in the two main groups. That's the bottom line.
Is this a sustainable trial? These trials are expensive. And what is your strategy in terms of funding this trial?
Well, I've raised $75 million in the last 2.5 years. So if need be, I can raise the required amount of money to get us to the finish line. We have something very, very big ongoing. I'm told by people we've gotten further than anyone else has ever gotten. We had to change the people running our phase 3 study because they were acquired in a roll-up financed by private equity. This, I believe, is going to make the front page of the Wall Street Journal and New York Times, because the unbelievable actually happened. And essentially, our study looked like it wasn't proceeding, and people gave up on the stuff. Completely understandably, we were enrolling one patient a month. New people came in, invested $12 million of their own money. The study is now enrolling one a day. I'm a lawyer by training, and so I brought an arbitration. It's been going on for 2.5 years. We are preparing for the final hearing. That's like a trial. It's going to be 4 weeks. At stake is $50 million direct damages, well over $100 million in consequential damages. And now comes the really, really insidious John Grisham stuff. You can imagine no one wants that to go to trial. Our legal bills were growing and growing and growing, 200, 300, 400,000 a month. And we turned to an outside litigation funding firm. I don't even know if you've ever heard of that. Someone else checked our case out over the course of months, is funding it with $5 million, and will get their money back only from the winnings. And that basically is very much part of how we intend to fund the remainder of the phase 3 study.
And I like the fact, Gert, that you, in January, yourself bought stock, which gives, I should think, give investors a lot of confidence, that you have a lot of confidence in what you're doing.
Oh, I always lead from the front, okay? And that was a scary time, middle of January. And I was up all night long worrying about it. And I said to myself in the end, I know the phase 3 study is going well. Why? Because we've gone from one a month to one patient a day. And we've sustained that. We've increased that. That means the doctors must be happy. The CRO, the new people running the study, have in October put an additional $2 million in. They're a small firm. They only get that back from royalties. So they have $12 million in the study. There are a bunch of other things also. I firmly believe the arbitration will be won. And I think none of these things are factored into the current share price. And therefore, I said, lead from the front and good things will happen.
Well, you know, at a $75 million market cap, when you look at some other companies that are in similar clinical trials at your stage, you are seeing 150 million, and some I've seen even at $1 billion market caps at your stage of development. So I agree, you are very undervalued. What is the actual market opportunity for this drug? 3 years, you get the data, you meet your endpoints. How big is the opportunity for you?
In head and neck cancer, if you were diagnosed with head and neck cancer, let's say you go to the dentist, they find a tumor in your mouth, the standard of care is established by the US NCCN guidelines is surgery to be followed either by radiation or radiation plus chemotherapy. That is the same standard of care worldwide, and that's how we're able to run our study in 24 countries, including the US. That is the comparator. We're giving our drug plus the standard of care. If we can improve the survival in the largest study ever done in head and neck cancer, where we make the current standard of care better, we should have a fairly good shot at becoming part of the new standard of care, right? Because it increases survival. That would mean, in theory, it's never going to happen, that 650,000 people every year should now get our drug. The numbers are absolutely obscene.
Billions.
And it's huge. It's clearly billions. But people have to arrive at these numbers themselves, because when they look at our small capitalization and I tell them the number, they think I'm just telling them nonsense. They must calculate it themselves, assume 10, 20, 30% market penetration, assume some price, make it less than the current cancer drugs, and you still end up with something very, very significant. But you know, the nice thing is you don't have to look at the money. You look at the benefit for the patients, because money comes from providing benefit to the patient.
You're 3 years away, however, from having these endpoints or meeting these endpoints. In between, you have some other collaborations. In fact, you have a phase 1 clinical trial. So talk to us about some of the other projects.
Well, that's really interesting. The exact same medicine that we're using in head and neck cancer, so don't think of it as a head and neck cancer medicine, is being used by the US Navy at San Diego Naval Base in HIV-infected men and women with human papilloma-related diseases. Human papillomavirus is the #1 sexually transmitted disease, and most of us, we tend to clear it, but if you're HIV infected, you really cannot, because your immune system is weak, and so over time, it tends to cause a lot of damage and can cause cancer. So that is something that the US government is pushing forward, and that's very, very interesting. It shows you that this is not a cancer drug even. It's an immune system drug that can work against cancer, but potentially also against viruses. And then we have a preclinical rheumatoid arthritis vaccine that once we have more money, hopefully still this year from the arbitration, we would like to take it to humans.
Garrett, what is you sort of illustrated it during the interview, but I want to sum this up. What is the essential value proposition for investors today? In a word, why should they accumulate position in your stock now?
I think you have to take everything to a personal level. You think of the people who you've known who had cancer, and how many of them initially it wasn't that serious, but they ended up dying. Our value proposition is that we have a cancer immunotherapy that is being used at the most logical time when you still have an intact immune system to give you a greater chance of being cured. That is something everybody wants. So money comes from providing a tremendous service. The value, you create an enormous amount of money if you actually help these cancer patients so they never become dying cancer patients. And if it works in head and neck cancer, and you see the Navy is using it in HIV, HPV patients, why shouldn't you be able to take it into other cancers? But first, you must prove it on the basis of one cancer. We're about proving the idea that boosting an immune system that's healthy, which is all logical, because we'll take herbs and vitamins, etc., is the logical way to go to increase our health in the fight against cancer.
Very well said. Very well said. Garrett, I thank you for being on the show today. I look forward to following your progress. It is a very exciting story, and we'll have you back on the show soon.
Thank you, Dave. Much appreciated.
Now, to get more information on Cellside Corp, visit redchip.com. And while you're there, subscribe to our weekly newsletter. Join the RedChip Nation today. Again, you will get an abundance of stock ideas on companies from all over the world, interviews, research reports, industry news, and much, much more. And it's all free. Tonight, I've showed you 3 companies: American CareSource Holdings on the NASDAQ, a revenue-producing operator of urgent care facilities that is set to rapidly expand through both acquisitions and new facility build-outs. One of the founders of Caremark, Greek business tycoon John Papajohn, is on the board. And notice again the insider buying in this company, always a good sign. We also watched an interview with Connecticut Water Service, the largest water utility in New England. This company has increased its dividend every year for the past 46 years. And finally, we saw an interview with Cellside, a New York Stock Exchange company with a phase 3 clinical trial underway targeting head and neck cancer. Now, any one of these stocks could break out at any moment. Microcaps, however, should be purchased in bunches, in baskets. Never put all your money in microcaps. Never put all your money in one microcap. These stocks are for your speculative money. And again, the gains can be significant, but you must be prepared for the downside. I'm not always right. I could be biased. Many of these companies are client companies. Some we may hold positions in. Read our disclosures at redchip.com. Again, I'm Dave Gentry. I'll see you same time next week here at the Red Chip Money Report.
Okay, again, I want to thank everyone for joining us today at the RedChip Global Online Growth Conference. Up next, we're going to move on to Positive ID Corporation, ticker symbol PSID on the OTCQB. And this is Positive ID Corp, PSID. And presenting for the company will be Bill Carregal, CEO.
Hello, I'm Bill Carregal. I'm the CEO and chairman of Positive ID, and I'm very happy to be with you here today to talk about our company. We do have a PowerPoint deck that I am going to take a walk through during this presentation. If you will see on slide 2, you have your safe harbor and forward-looking statements, which I will let you review at your leisure, similar to probably every presentation you've ever seen. But if we go to slide 3, I want to start talking to you about what we believe is a very exciting company. We are a life sciences company that has a long and strong history in the field of molecular diagnostics. We started our business plan about 5 years ago, and we brought it together based on the very significant development that had been done in conjunction with Department of Homeland Security around our product that we call M-Band. And I'll talk more a little bit later about the specifics about that product and its intellectual property platform, which has really launched everything that we've done over the course of the past 3 years leading to today, which focuses on our product Firefly, which is a truly exciting and we really believe game-changing technology and product. Along those lines, we have 4 products. They are all very strong product lines. They're all based on a platform and an intellectual property platform, including 22 patents and patents pending. We have world-class partners and customers, which I'll talk a little bit more in detail about as we go through. And we have an experienced management team across the board that we've also made significantly stronger over the course of the past several months with the acquisitions we accomplished in December. And in looking at what we announced very recently, we announced our year-end results for 2015, which included revenue of over 2.9 million, which was a significant increase over the revenue of just over 900,000 in 2014. And further, as we've been talking about and giving guidance as to our business model in 2016, which includes the two exciting acquisitions, we are going to be continuing to talk very much about our revenue targets of between $5 to $6 million for this year, 2016. So if we move ahead to slide 4, I just want to take a minute to just touch on these photos, because as we talk about our products, I think it's always helpful to have a picture. If you look at the lower right-hand corner, you'll see a picture of our M-band bioaerosol fully automated detection system that we developed under contract with Department of Homeland Security. It was from that intellectual property and everything we developed and learned as far as know-how and patents in developing the M-band that led us to the development plan and now breadboard prototype of Firefly, a handheld molecular diagnostic device, which is in the upper center picture on slide 4. And then to bring a little bit of relevance to our other product lines and businesses, if you look back to Monday, we put out an announcement about the shipment of a large mobile lab to a large customer. You'll see a picture of one mobile lab that was actually delivered a couple of years back, both in the lower center, an external shot, as well as an internal shot of a lab on the far left-hand side. By being able to bring our expertise in biological detection to the mobile lab business with its long and strong history, our subsidiary called ENG Systems, we've created a true synergy, and you see already the results of those synergies and those opportunities in the announcement about the large mobile lab that we delivered and put out the announcement on Monday. And then finally, in the upper right-hand corner, you'll see a picture of our Caregiver product, an FDA-cleared clinical-grade thermometer focused on non-contact thermometry through infrared. And again, we will talk about all of these products as we go through the presentation. Moving ahead to slide 5, you can read along at the resumes and the backgrounds of our management team, our board of directors, and our board of advisors. What I would tell you across the board is that we have a very strong and deep team. Most of this team has been working together for the entirety of these past 5 years, and in some cases far longer than that. And what we bring together as a team is a strong scientific, technology, and product development background, combined with business development experience and relationships, especially in government markets from which we've evolved and developed into commercial markets, as well as a long history of management of early stage and exciting developing stage public technology companies. Now, if you move ahead to slide 6, I do want to touch on what I think is one of our biggest assets, one of the most exciting things about our company, which is the customers and the partners that we have developed historically, as well as you'll continue to see in a lot of our current and soon-to-be future announcements. I will talk to you about our long history with U.S. federal government, especially Department of Homeland Security and Department of Defense. As we move across to our newest development on Firefly, you'll see that we've got agreements in place with the likes of NASA, U.S. Special Operations Command, as well as Department of Homeland Security. And then when you look across our other product lines, we also have very significant distribution partners in place between the McKessons and the Henry Scheins of the world as we look at our Caregiver product line. So now maybe to take a deeper dive into each of our products, I'd like to start with M-band, which you'll see on slide 7 on the deck. M-band, as I mentioned before, is a bioaerosol fully automated detection system. It was developed under contract with the Department of Homeland Security, for which we received $30 million in development over a 5-year period of time. And what we developed was this product in conjunction with the help of Department of Homeland Security to address a very specific issue, which is the ability to take airborne samples and to be able to test them for bioagents, and specifically weaponized bioagents that would be weapons of mass destruction. This system was designed to be the next generation system for what's currently in place called BioWatch, which is a series and a system of manual air filters that are, by their nature, taken manually on a daily basis back to a lab where those samples and screens are cut up and tested through a traditional lab-based PCR program, which can result in information or actionable information being disseminated at times in intervals of 36 to 48 hours. What is important about the M-band is it takes air samples 24/7 and can reduce that time to detection and notification down to 3 to 6 hours. And all of the studies will show that when you're able to have that information faster and be able to react, you can drastically improve outcomes, specifically reducing casualties. We, over the course of the past couple years, have partnered with Boeing Company, for which they paid us a $2.5 million license fee to be our exclusive partner as it relates to this product. And what I'd like to also focus on is I think it's a good place for us to start, because while that next generation BioWatch system will continue to move at its own pace, which is never as fast as I think anybody would like it to, what we took with that know-how and that intellectual property led us to the development of Firefly. So with that, I'd like to move on to slide 8 and talk to you about Firefly. Firefly is our molecular diagnostic device that we designed on that very important platform of intellectual property, including the patents and the know-how that we developed with our M-band program. Firefly is designed to be a handheld point-of-need diagnostic device. We are looking and have designed this device to be able to give PCR lab quality results in under 30 minutes at a fraction of the cost. So when you look down at bullet 4, you'll see some of the tests we've been able to run, and these are both our own and third-party assays between MRSA, C. diff, E. coli, influenza. If you read our press releases, you'll see that there's over a dozen of assays that we've tested on our benchtop prototype. But what this fundamentally does is it allows you to take lab-based PCR testing, and it's all lab-based right now, and to be able to move it out into the field in a handheld unit. So whether it's moving it into a hospital, into an operating room and testing for MRSA, in a hospital testing for C. diff, in a very remote vegetated area testing for influenza, or reacting to pandemics and other outbreaks like you saw or currently see in Africa with Ebola, or currently in South America and southern portions of the United States with Zika. Those issues that are now being addressed with lab-based testing will be far better served, we believe, with a handheld diagnostic device. So currently, lab-based testing will take between 4 hours to multiple days to be able to get results. Those devices will typically cost anywhere between $40,000 to $60,000. The per test cost will typically range in the $200 to $250 range. So by being able to take a handheld device, take it out into the field, to be able to bring that product to market at price points, let's say starting at $5,000, and at volumes be able to achieve price points down closer to $1,000, to be able to do those, get the results on those tests in the field in under 30 minutes, and to be able to perform those tests at ranges of $25 to $50 a test will both drastically improve the outcomes because of the time to detection, as well as being able to reduce the cost, all while doing so at lab quality. You'll have seen from our announcements that we've talked a lot about the testing that we've done in the lab and on our lab-based benchtop prototype, where we have been performing tests. We have been performing tests on our assays as well as some of our partners' assays. And the reason why this is so exciting, I talked to you about NASA, U.S. Special Operations Command, entering into CRADA's cooperative research and development agreements to be part of our team as we move this product forward. We've talked in the past about being part of the Department of Homeland Security SenseNet program, of which we were part of, phase 1 of that program. The market, the current PCR market, and there's lots of ways you can divide it, but if we looked at the PCR market for global real-time testing, it's estimated at currently about $6 billion, and that's entirely lab-based. If you look at the infectious disease diagnostics market, that's an $18 to $20 billion market. Again, currently being addressed by lab-based testing. As you can see, with just a small amount of penetration, we will be able to have a very significant result when we're able to bring our Firefly into the market. We have announced that we completed and have successfully tested on multiple assays our benchtop prototype device. We are currently have the designs and plans to move forward with the building of handheld prototypes, which will be a key next step in being able to get those prototypes into the hands of potential customers to test, to use, to examine, as well as move forward into regulatory. We believe that we're about a year away from that once we start that next step in the program, and we're currently in discussions and looking for a strategic partner, whether it be a government customer, a commercial partner, to help us as we move forward in that process so that we can hit our target, which is to have these units, these prototype units out in the field in clinicians' hands by early 2017. And moving on to slide 9, I want to talk for a minute about ENG, Mobile Systems. This division, which is a company that we acquired back in December of 2015, you'll have most recently heard or be familiar with by the press release we put out on Monday, talking about the shipment of a large mobile lab to a customer that we're not at liberty to disclose, but is an important step in our continued progress and our early positive results coming after the acquisition. ENG is a business that's been around for over 20 years. It has been successfully operated and been running at an average revenue over the past 10 years in excess of $4 million. It has strong operations, operating in gross margins typically in the mid 30% range. And the fastest piece of this business over the course of that past 10 years has been the biological lab business, which was a great synergy and tie-in when you look at our labs in Pleasanton, California, their operations in Concord, California, their proximity, the familiarity of our management teams, and our ability to bring together our biological expertise with their long history of being able to successfully deliver mobile labs as well as other high-end lab and communication vehicles to both government and commercial partners. I think when you look at what we've announced this week, as well as what we'll continue to talk about going forward, you're going to see an example of one acquisition, and I'll talk about another in a minute, coming in December that is really adding great synergies to the company as we move forward and build on our successes from 2015 into 2016. So ahead to slide 10, I want to talk about another acquisition that we made in December, which is related to this caregiver non-contact thermometer, of which you see a picture again on page 10. Caregiver is an FDA-cleared clinical grade thermometer. This thermometer gives temperatures with no contact, is able to give them in a 1 to 2 second interval after you press the button, and importantly eliminates cross-contamination in a hospital or a clinical setting because, again, the thermometer never touches the patient. Also, because it never touches the patient, You don't need to use probe covers like you do with oral predictive or the tympanic thermometers, which can cost 5 to 10 cents per probe cover. And when you look in a hospital or in a doctor's office, how many times those are used, when you approach it from a business and a return on investment standpoint, when we get into our sales presentations, this is a product that provides return on investment to the users in under a year. So when you look at what we were able to accomplish by bringing in Caregiver as well as E&G in December, we were again able to build on some great synergies. When you look at the distribution channels and the sales model for Caregiver, it gives us a great ability to leverage in that direction as we bring our Firefly product into market. Similarly, based on the business development experience of our team, our board of advisors, our board of directors and management, we're able to take the current sales channels of Caregiver and to be able to expand beyond just commercial medical into the government markets where we have gathered quite a bit of experience. When you look at the Caregiver thermometer and you look at the market that we're entering, the global market for thermometers is expected to exceed $1 billion. If you look underlying those numbers, you will see that the fastest growing portion is non-contact and infrared thermometers. So we believe that by bringing on Caregiver now during its early stages and being in a year post-launch, we're getting in at exactly the right time to be at the beginning of a growth curve and to be able to leverage the synergies both from the expert team that came on board and the founders of the Caregiver thermometer, as well as our ability to leverage our existing relationships and sales channels to do what you always try to do, which is to try to make 2 and 2 equal 5. So moving ahead to slide 11, which is our financial results. And we did report our year-end financial results, so that's what you'll see here on this slide. Additionally, it is now April, and we are past our first quarter and are in the process of moving forward with our first quarter reporting, and we'll look forward to speaking to everybody about that when we move ahead into early to mid-May. But if you look at our last year results, you'll see, as I stated before, that we had $2.9 million of revenue, an increase over the $945,000 we had in the previous period. You'll also see an operating loss that did increase between 2014 and 2015. That operating loss was primarily driven by the significant increase in research and development that was focused on taking Firefly from its early design phase during 2015 to the completion of the breadboard prototype, which has allowed us to be able to have a platform on which to build. So it's, I would say, the best investment we made in 2015, which is something to say, given what I just talked about with 2 outstanding acquisitions made in December. On the balance sheet, you'll see a cash balance of $173,000 at year end. And importantly, if you look at the total asset line, you'll see that we moved, as a result of the acquisitions, from a total asset base of just over $1 million at the end of 2014 to where we were just under $4.7 million at the end of 2015. Before I leave this slide, I would emphasize that when you look at the revenue moving from $900,000 to $2.9 million, we had the acquisitions in place for just a portion of the month of December. So when you look apples to apples and look at what we're going to be able to execute and deliver in 2016, we have fundamentally changed the revenue and operating income as well as total asset line as we move forward. We are very comfortable staying with the target that we put out after the acquisitions of being able to deliver $5 to $6 million for 2016. And we will speak more to that when we get a couple weeks out and be able to report our first quarter and be able to start communicating a little bit more deeply on the underlying results and how things are developing. Moving ahead to slide 12, I want to touch on our capitalization. You'll see, and this is again using year-end numbers, a common shares on a primary basis of just about 500 million, as well as a diluted of just over 660 million. You also see on here what comes in between, which is some preferred stock, as well as some options and warrants. And then a convertible debt balance coming off of our balance sheet at year end of $6.6 million, which reflects the financing that we used to both fund several important investments, including the research and development in Firefly, as well as the acquisitions of ENG and Thermometics, the company that brought us the Caregiver product. So finally, moving ahead to page 13, what I'd like to emphasize and remind you from the slides that we just went through, that Positive ID has 4 very exciting products based on a great base of technology, specifically an intellectual property platform that includes 22 patents and patents pending, as well as a significant amount of know-how, which creates a differentiating advantage for us as we move forward with Firefly. I talked to you about our world-class partners and customers, and I will look forward to continuing to talk to you as we go forward, as we build on those relationships and add what I would expect would be a number of new and exciting relationships as we continue to move forward in 2016. We bring this to you as a deep and experienced management team on the level of the technology, the science, product development, as well as the public company management and the business development relationships to really take these products and move them forward to build on the great success that we had in 2015 for Firefly, for ENG, for Caregiver, and to be able to continue to move those forward successfully in 2016. We're very proud of what we accomplished in 2015 and remain very excited about what we're going to be able to continue to execute and deliver in 2016. So with that, I would like to turn it over to any questions that anybody might have. Thank you.
Okay, we're now going to open up the line for our Q&A session with Positive ID Corporation. The ticker symbol is PSID, and that's on the OTCQB. And for the Q&A session, we have Bill Caragall, CEO. Welcome, Bill.
Thank you very much.
Our first question, could you talk a little bit about the main drivers behind your 2016 revenue guidance of $5 to $6 million?
Absolutely. Looking at the acquisitions that we made during the month of December in 2015, and I guess as a basis for somebody who's interested in looking at the underlying build-up and historical financial statements, we have filed Forms 8K with audited financial statements for both of those 2 acquisitions with the SEC. So they're out on the EDGAR database. But we've talked, and I've talked a bit about the ENG acquisition, which brought to us a company that over the past 10 years has averaged about $4 million or slightly more than $4 million a year in revenue. And in addition, we have an early stage, recently launched FDA cleared medical clinical device, the Caregiver thermometer, which has historically done normalized run rate revenue of a few $100,000 a year. It did have some spikes related to some large sales to government entities at the time of the Ebola crisis. So when you bring the 2 of them together, that gives you, if you will, an apples to apples pro forma of what our historical run rate leads into on the 2 acquisitions. And in addition, we anticipate, as we have in the past, to continue to get customer-driven development dollars related to our Firefly development. So we did post just below $3 million of revenue last year. And in looking at our backlog and our pipeline coming into 2016, and I gave you a little bit more depth on what the historicals look like for our acquired companies, we feel, as we did coming out of the acquisitions, and I would restate that today, very comfortable with being able to project a targeted revenue for 2016 of between $5 to $6 million.
Very, very good. It's very exciting things that are going on, to say the least. Our next question, we have a few minutes remaining. Real quickly, is Positive ID looking for opportunities to address the Zika virus issue?
So the answer is yes, and I would go back to my discussion of our Firefly product. Firefly wasn't developed for Zika. It wasn't developed for Ebola. It wasn't developed for any specific condition or outbreak, but rather it has been developed for the purpose of being able to bring lab-based diagnostics more inexpensively, as accurate, and far more quickly in a handheld device anywhere, anytime. And the reason that's important is, again, because being able to diagnose out at the point of need is fundamentally better when looking to reduce outbreaks such as Zika. So we have been working with assay partners so that as we continue to develop our device to get it to commercialization, it addresses, in this case, to your question, Zika, but everything that you need to be able to detect out at the point of need, as well as whatever next year's outbreak or concern is going to be. So we focus, Firefly is very much focused on the bigger picture, but given current developments, we join with the industry in being very concerned about being able to address Zika, as all are concerned about it directly impacting many of our communities here, especially as we move into to spring mosquito season.
Absolutely. And since we're just talking about Firefly, can you maybe expand? We have a couple minutes left. Can you maybe expand a little bit about where you are in the development of Firefly right now, and when can investors expect sales from the product?
So we've have been tried to be very communicative about our direction as well as our accomplishments. And leading in to cut to the end of that story, as we moved and completed a couple very important development steps towards the end of 2015, we have a fully functioning prototype on the benchtop in our labs. And what that means is we have the ability to introduce a sample through the sample prep module, as well as the PCR testing module, to be able to get results that we're then able to compare against your standard lab devices to prove that the Firefly will work. And what we need to do now, in the important next step, is to take those benchtop prototype and turn it into a field testable prototype so that we can then get it in the hands of customers and partners for testing and to be able to prove the results in the field and not just in our lab. And as I mentioned a little bit earlier, we are currently focused on bringing in the right partner or partners, government or commercial, to help us through that process, because we believe with the right partner and with what we've been able to accomplish, we can, within 1 year's time, be able to turn out those field testable units, which will allow us to then get into regulatory and commercialization. So packaging that somewhat long-winded explanation together, it puts us in the market with execution in 2017.
Very exciting, and look forward to hearing more about the progress as things develop. For our viewers, we were just speaking with Bill Carregal, CEO of Positive ID Corp. You can find out more about Positive ID right here at redchip.com. The ticker symbol is PSID. We're going to move right into our next presentation, which is BTCS Incorporated. Ticker symbol is BTCS. And presenting for the company will be Charles Allen, CEO.
Hello, my name is Charles Allen. I'm the CEO of BTCS. We're a blockchain technology company. Before we get started, if you just take a moment to read the Safe Harbor statement on slide 2. Moving along, what I'd like to do today is just go through some of the investment highlights of the company, the industry overview, corporate overview of kind of what BTCS is and where we're going, and then follow up with a summary and Q&A. Slide 4, our investment highlights. BTCS is an early mover in the blockchain and digital currency ecosystems. We're actually the first pure play public company focused on blockchain technologies. For those not familiar with the blockchain, it's a distributed public ledger that has the ability to fundamentally impact really all industries on a global basis. There's tremendous long-term opportunity as blockchain applications emerge, and we're excited to be one of the first players in the space. We currently secure the blockchain through our transaction verification services business, which we run out of our facility in North Carolina, and are also looking at other blockchain solutions as well. As far as the industry overview goes, it starts on slide 6. The blockchain is a distributed public ledger which is maintained on a global basis. Why this matters is it's really the first time in history where you're able to move assets digitally. And if you think about this just from the concept of what did the internet bring? It brought lots of disruptive technologies, but the one thing it didn't bring is the ability to digitally move assets. And a great example is think about a file, whether it's an image you email to a friend, a PDF you email to a colleague. Those are all just copies. No one actually has the original. So if you wanted to send a digital asset, let's say a PDF, and move the original, that didn't exist before blockchain technologies. That's what intermediaries do, whether it's a bank and you're moving money, whether if it's a stock, it could be the transfer agent, the exchange, and your broker-dealer, all playing a role in a settlement. So another way of thinking about that is if you bought something for cash, and so you bought a coffee and you paid $2, that transaction occurred and settled at the same instant. If you buy something over the internet, settlement doesn't occur for a very long time. And that's what blockchain technologies allow for, is the settlement of digital transactions or movement of digital assets without a trusted third party in the middle. So what does that mean? When you look at the blockchain, this is slide 7, and potential applications, digital currencies such as Bitcoin are just the beginning of what could be done. And there's a lot of use cases there, such as micropayments, remittance markets, and the like. There's also a lot that could be done as far as record keeping, whether that's concert tickets so that there's no forgeries, title records, securities. There's a lot of companies working on the securities market, escrows, and that could be whether it's using Bitcoin and or other digital currencies as a way to facilitate wagering online. There's a lot of things that could be done using blockchain technologies. So moving on to slide 8, there's a lot of hype and buzz around blockchain as well as Bitcoin. And so what I want to do here is just talk a little bit about the different models and how they kind of can impact society and the like. So in a centralized model, there's a single point of failure. And this could be as simple as, in the banking world, a credit card getting a company, whether it be Walmart or a large retailer, has information on credit cards. If they get hacked, any one point in their system, any breach, and the information could be out. In a distributed model, the information is everywhere and it's synchronized. So you have to hack the whole system, not just one node. And there's really two different models. One is our private blockchains, and the other are public blockchains. Private blockchains are also often referred to as permissioned blockchains, and these are basically models where a group of companies or individuals decide that they're going to build a blockchain, and those that are have a seat at the table get to secure the network. And everyone has to trust each other in this model. In a public blockchain, whether that be Bitcoin or Ethereum, it's distributed, so you don't have to. It's not a trusted group. And I look at these in terms of parallels, in that private blockchains have the ability to fundamentally, improve settlement times in certain scenarios, whether that's, a lot of banks are focused on this, but in many regards, it's kind of like AOL in 1995, where you had one point of access and all your everything was done through that point, whether that's instant messaging, email, the internet. And that was, while extremely innovative, the real kind of revolutionary change in how we do things through the internet was based on a much broader open source network. And I think that's what the public blockchains allow for, is a open source layer to build distributed applications on. And there's a lot of companies focused on those efforts. Right here we kind of highlight Rootstock and Blockstream. And this could also be done with other blockchains such as Ethereum as well. Moving on to slide 9, the most prominent use case for Bitcoin's blockchain right now is Bitcoin as a currency. And there's a lot of reasons that makes sense. And I've been through the slide in the past for those investors that have watched it. But Bitcoin has a lot of traits that money has not had in the past. The one thing that Bitcoin kind of misses is acceptability, and it also is very volatile. So it's not a great store of value if you don't want it to change. But then again, it's, if you move on to slide 10, it depends what country you live in. So Bitcoin may be a better store of value if you live in a country with a weak currency. Moving on to slide 11, and this is slightly outdated. Bitcoin adoption is rapidly accelerating. For those who follow the media, I think Bitcoin's been called dead well over 100 times, yet it's still alive and well. The price is now around $460, up over $200 since last year. The number of transactions on the blockchain has rapidly grown. That's why there's a huge debate on how to scale Bitcoin. So these are all very positive for the industry. Though the growth is not, in terms of killer applications, is taking longer than I think many industry participants would have thought. Moving on to slide 12, there's been a tremendous amount of venture capital money that's flowed into Bitcoin and blockchain technology companies to help build the ecosystem. Moving on to slide 13, corporate overview. And here I really want to talk about what BTCS does. So when we initially started the company, our focus was on e-commerce, and we broadened our focus to other digital currency companies, and we did that through making select investments in a couple other startup companies. For instance, one is Gem. We were in the seed round there. They're working on not only some of the legacy items such as backend for Bitcoin Wallet, which we built our solution on, but they're also working on blockchain technologies for healthcare records. So we're really excited for what they're doing and proud to be an investor there. We're also an investor in GoCoin. Our immediate focus right now is securing the blockchain through our North Carolina facility, where we have just under 1.8 petahash running, and where we see ourselves going in the future is distributed applications and solutions that can be built on top of Bitcoin's blockchain. Slide 15. So those that don't really understand the kind of how a transaction works, the number of Bitcoins that can be issued total 21 million. And so think of the Bitcoin network as almost like a startup company, where Bitcoin is equity, and as the company grows, or as most startup companies grow, they issue equity until they become profitable. So Bitcoin was designed in that same, has that same kind of feeling to it, in that as the number of transactions go up over time, the number of newly issued Bitcoins provided to those who secure Bitcoin's blockchain will decrease, and the transaction fees will increase to basically eliminate the subsidy for securing the network. So if you look at that in a transaction right now, in this example, Bob sends Kate 3 Bitcoins, Kate receives those 3 Bitcoins, a miner or someone that operates transaction verification servers would be subsidized by the network with newly issued Bitcoins, and also get a very small transaction fee. Over time, the newly issued Bitcoins will go away, and it'll just be transaction fees. And as well as any distributed applications that use the security provided by Bitcoin's blockchain will also have to pay those that secure the blockchain a fee. So slide 17 kind of walks through a revenue and gross profit example of how this all works. As I said earlier, we're running just right now about just under 1.8 petahash per second. In this example, it kind of assumes if we were at full capacity, so these aren't the the numbers that are current with the equipment we're currently running, though we have 3 megawatts worth of power. So the monthly revenue is just a function basically of what the network difficulty is and the hash rate or the amount of capacity that one is running on the network, and the power and mining expense, which is essentially equivalent of cost of goods sold, is the power that is used by the servers that one runs, and a function of the electricity cost and how much time you run that. Moving on to slide 18, we have a pending merger with Spinduli's. We've been waiting on the approval from the Israeli Tax Authority. We still do not have that. Right now, there is, we're waiting on that, and if we're able to successfully close the merger and vertically integrate, we'll have a very nice model. Though there is no financing contingency to the transaction, we're also diligently working to secure the funds necessary because as a combined company, we would have a very different burn rate and cost structure. Slide 19 kind of talks about our facility margin and expansion plan. So there are really two aspects that make one competitive. It is, one is the efficiency of the equipment, and the other is the cost of a data center. So in North Carolina, we have, we estimate that we're at about 5.5 cents a kilowatt hour all in. That makes some estimates based on the demand charge, which is only charged off peak, and we walk through some of the math here of how that works. We're also evaluating the possibility of a solar installation, which we believe could lower our costs. Where we've been extremely competitive is the build-out cost per megawatt. Excluding, for the 3 megawatts we've built, we're about $95,000 per megawatt, and that excludes the cost of the building, assuming we were to, purchase it and spread those 3 megawatts over the purchase price. So that's extremely low as far as industry standard goes. We actually recently released a virtual reality tour of our facility in 3D. So if you want to see the building from the outside and or the inside and take a look around, you can really see what we've built. We've been very resourceful in terms of how we've built that to keep our costs down. Looking at the potential for Spinduli's, to the extent we're able to complete that merger, their product roadmap is really moving to a 16 nanometer design. Recently, some of the competitors have come out with their 16 nanometer chips, and we expect that some others will be coming out soon. So that's that's where the roadmap is going there. Slide 21, just looking at the competitors, and this is a very similar slide that we've had in the past. To the extent we're able to complete the merger, our kind of challenge is funding compared to our peers. Bitfury's raised $60 million to date. KNC's, I think they're about $33 million to date. So we're looking to do things, with much less funding. Moving on to slide 22, this is something that I find very interesting. We've got investments in other companies, Gem, GoCoin, ExpressCoin, etc. And they're, in the current market, I kind of look at it very similar to the internet in 1995. We're seeing a whole host of opportunities. So if we're able to, as one of the few public companies, one of I think 3 public companies in the space, we may be able to capitalize on other investment opportunities or acquisition opportunities as well. The management, this includes Spinduli, myself, and Michael, have been kind of leading the way. We're really excited to take our business to the next level. Moving on to slide 24, our growth strategy is to kind of build out our transaction verification services business. We've also started doing a pilot program in Ethereum mining, and we've, I think that's given us some very unique expertise. We're working on some exciting potentials in that space. We've also started to host some Ethereum mining in our facility in North Carolina to drive revenue. and we're getting very close, if not being at break even in the North Carolina facility, though not at the kind of whole corporate level. We're also extremely dedicated to trying to move the company to a NASDAQ or New York Stock Exchange to increase our exposure and investor universe. And I think at that point, I'd like to move it to questions and answers.
Okay, we're now ready to open up the line for our Q&A session with BTCS Inc. Ticker symbol again is BTCS. And with us today, we have CEO Charles Allen. Welcome, Charles.
Thank you for having me.
Our first question, what type of products would you be potentially looking to build on the Ethereum blockchain?
That's a great question. Right now, our kind of pilot program in Ethereum is on the mining side. So that's been the focus there. We're also looking at expanding the hosting capability. We haven't launched any specific products that we've built on Ethereum's blockchain, but we do have some ideas in mind, but we're not disclosing anything at this juncture right now on where we may go with that.
Thank you, Charles. What further steps need to be taken to close the merger with Spendoolies that was announced last fall?
So there's one thing. We have we have to get approval from the Israeli tax authority, and the more important item is we need to be able to strengthen our balance sheet to a position where we can basically fully fund the combined entity. While there's no financing contingency to the merger, if you look at our past SEC filings, we kind of disclosed that the burn rate associated with the two companies would be higher than it is. So that would that's kind of been our focus is as management, as ways we can strengthen our balance sheet.
Very good, thank you, Charles. And what factors determine where you expand your transaction verification services business?
Well, right now we are looking at, we're in North Carolina, so we have 3 megawatts of power readily available. We're using just under 1 megawatt of that power, so that would be the first place we would expand, because we've already kind of paid and built for the internal build out. In how we do that, we're looking at mining Ethereum as well as potentially other digital assets. Ethereum right now I think has a shorter payback period and is more profitable to do. And so that's that in addition to Bitcoin is how we're looking to expand that. On the Bitcoin side, we're kind of keeping an eye out for what will happen with the impending halving that's coming up in July. So that's our what we're currently looking at right now.
Thanks, Charles. And can you now talk a little bit about you mentioned Spendoolies earlier, but we can get into the specifics as far as their SP50 server, which is something that you could be deploying at your own facilities in North Carolina, but you could also be selling to other operators out there. Can you talk a little bit about the SP50 server and in the potential market size opportunity that's available there?
Well, on that kind of comes back to the financing question. Spendoolies had designed the 28 nanometer SP50. We did not, as we've kind of disclosed in the past, did not achieve the funding we were looking for to get that to market. They have a plan for a roadmap to do a 16 nanometer design using the same form factor. But again, it kind of comes back to that same point of, in order to move that forward, we would need to, capitalize the business to be able to get to that scale.
Thanks, Charles. And can you talk a little about what type of factors could change your estimate of the $48.26 cost to mine each Bitcoin?
Well, the cost to mine a Bitcoin, changes based on, really one factor, which is the, network difficulty. It also depends on the equipment. I guess the equipment efficiency. But if you have the same equipment, it really depends on the network difficulty. So we've seen a very big rise in the difficulty rate since the end of last year. I think around December 18th, we've seen the difficulty rate go up from on average around 5 to 6% through some of or most of 2015 to 15% in 2 weeks at some points, if not more, during the beginning of end of 2015 December and the beginning of 2016. So that's something that we keep an eye on, and affects what it costs to mine a Bitcoin. But it seems to have at least the last period decreased slightly, which was April 28th. The difficulty actually went down, so it had a very rapid rise, and it seems like it may have plateaued again, but we'll see.
Thank you, Charles. And of course, in some of these Q&A here, we've talked a little bit about Bitcoin, a little bit about Ethereum, but obviously, transaction verification services and securing the blockchain, there's quite a bit of opportunity. For some of our viewers out there that maybe aren't as familiar with the blockchain, can you talk a little bit about the broader opportunity and applicability of the blockchain across different industries?
Sure. I think whether it's Bitcoin's blockchain or Ethereum's blockchain, and that's they're different, right? In that Bitcoin's blockchain is secured by a proof of work system, so that's computers doing, maintaining it, while Ethereum's is now proof of work, but changing to proof of stake, kind of who owns shares in it. There's on either. I think there's going to be opportunity for other applications and assets to be traded, and there's companies working on building out those solutions on Bitcoin's blockchain. Ethereum, that's kind of what it's built for. But just to give you some examples of what could be done, anything where you have a digital asset and you need kind of immutable proof of ownership could be put on a blockchain versus a traditional database. And an example of that could be a land record, a stock certificate. Think about anything where you need to transfer an asset, right? The internet allows for the for easy transfer of digital files, but it's always just creating a copy. If you send a picture to someone, they have a copy of it. You could send them a PDF, they have a copy. You can't send someone an original picture and know that they have the only valid copy. You can start to do things with like that with blockchain technology. So there's a lot of places you could go with this. And I think that's kind of the exciting part.
Oh, yes, very, very exciting indeed. I guess in summary, obviously you've covered a lot of great information in the presentation as well as here in the Q&A, but what's the key takeaway investors should have about the BTCS opportunity and what lies ahead?
I think we're in a unique position in that we've we're kind of the first pure play public company in the space. We have some investments within the ecosystem, and we're constantly exploring the industry. And that's one thing that's really interesting in this space is there's been huge excitement around Bitcoin. That's kind of moved to blockchain technologies, but it's very similar to kind of the internet in the early days. There's just a tremendous amount of exciting developments happening, and we kind of have our ear to the ground and are keeping an eye out to look for opportunistic ways that we can capitalize on this technology. So I think that's a very unique aspect of our company, in that where we are kind of positioned as a public company.
Absolutely, definitely seem to be in the right place at the right time. So we look forward to hearing about some of the continued success and progress at BTCS. For our viewers, we were just speaking with Charles Allen, CEO, and again, this is BTCS Incorporated. Ticker symbol is BTCS, and you can find out more information, of course, about BTCS right here at redchip.com. You can also sign up for news alerts, which is the fastest way to stay abreast of all the latest developments as they happen. You can do that right here underneath the presentation. Just enter your information, and we'll be sure to add you to the list and have the news out to you as quickly as it comes out. And we're going to be moving on to our next presentation. Before we kick off that presentation, we're going to be playing a short introduction video about the company, and that's going to be for Sack Lunch Productions, ticker symbol SAKL. And it'll be Sack Lunch Productions coming up at 3 p.m. Eastern. And presenting for the company after we show the short introduction video will be Richard Serber, the CEO. And I'll be coming up here just in a few more moments.
Good afternoon. My name is Richard Serber. I'm the CEO of Sack Lunch Productions, and I'm going to talk about my company. We're an events management company, and we currently host 5 different events. Color Me Rad is a 5K color run. Another one is Lantern Fest, which is where we send off sky lanterns in the sky. The next event is a obstacle course. It's called the Dirty Dash. And the fourth and flagship event is called Slide the City. And our newest event is called Trike Riot. So in 2016, we're projecting hosting over 250 corporate and franchised events throughout the world. About 156 of those will be corporately hosted. During 2015, when we launched Slide the City and Lantern Fest, we received a ton of positive media coverage and many major corporate sponsorships. And this year, we plan to file a registration statement with the SEC, hopefully by June of this year. So moving on to slide 4, you can see that our ticker symbol is SAKL. We have about 142 million shares issued and outstanding right now, afloat about 73 million shares. And in 2015, we did 10.6 million in gross revenues. So moving on to slide 5. You can take a look at some of the growth from 2014 to 2015. 2014 is when we first launched Slide the City, so we only did about 3 events in that year. And then coming into 2015, things ramped up considerably. You can see that we had a 121% increase in revenues. Our assets increased by 84%, and our net equity went to a negative to a positive. Moving on to slide 6. Some investment highlights, which we kind of already reviewed. 2015 revenues up 121%. We're projecting probably a little over 18 million in revenues in 2016. We have a team with proven operating experience. We have an impressive list of corporate sponsors. In fourth quarter 2015, we obtained a $5 million credit facility, which was used to acquire 2 of our more seasoned brands, which was the Dirty Dash and the Color Run. And throughout 2016, we were able to draw upon that credit facility. Again, in 2016, we're experiencing tons of positive media coverage. The 2 events that the 2 companies that owned Color Me Rad and Dirty Dash had a database of millions of participants, both in email form and on social media, including Facebook and Instagram, and a lot of YouTube followers. The total US market for event productions, we estimated to be about 20 billion. And one of the things that we're very excited about is adding Trike Riot to the calendar of events. So, like I said, we have some pretty impressive corporate sponsors. So you can see on slide 7 here that a lot of these are franchisees sponsors. So Sprite, Sony, Nestle, Hong Kong Airlines, for instance, all of those were procured by some of our Asian partners. Locally, we had CBS, which helped kick off a lot of our initial events. And more recently, we have Razer that's sponsoring Trike Riot. They're actually providing the trikes that we'll use in those events. And we have, I think, the first 2 events scheduled for Trike Riot. So moving on to slide 8. For those of you that haven't seen what Slide the City is, what it is a 1,000-foot slip and slide that we set up on main thoroughfares, city streets. We try to set them up on as much as a 7% grade. We like them to be highly visible for all the spectators. And there's always entertainment and food. The average revenue per participant is about $29. And we estimated this on the low side. We like to host at least 2,500 plus participants per event, and we're experiencing rapid expansion of both corporate and franchise events, as you can see from 2015 to 2016. Often we'll do 2-day events with regard to Slide the City in some of the larger markets, Vancouver, for instance, or Hong Kong, which is one of our franchisees. And in those cases, they've hosted as many as, or close to about 10,000 participants over the course of 2 days. So moving on to slide 9, Color Me Rad. Fourth quarter of 2015 is when we acquired Color Me Rad. And again, the average cost to participate is about $28 per participant. Again, we like to have a minimum of about 2,500 participants per event. Some of the larger events that are held by some of the franchisees and some of the corporate events reach, again, close to 10,000 participants. So you can see this 224% increase in revenues and number of events. That's because we only host a small amount of events in the last quarter of 2015. Color Me Rad is one of our more seasoned events that has an operating history of close to 5 years. All right, moving on to slide 10. This is one of the more heartfelt events called the Lantern Fest. Again, the average revenue per participant, $25. We like to bring in at least 4,000 participants per event. And you can see here that we're increasing the number of events in 2016 substantially. So we just hosted this last weekend, the Lantern Fest in the Denver market. And it was a 2-day event. I think between the 2 days, we came close to hosting about 20,000 participants. And this event creates a real emotional tie with the people that participate in it. So moving on to slide 11, our fourth event. This is the Dirty Dash. It's a mud run obstacle course. Again, average revenues per participant, averaging on the low side, $29. We like to host 22 plus participants per event. And you can see that we're increasing substantially the number of events that will in 2016 from 2015. And the last event is called Trike Riot, and it's basically an adult-sized trike ride race. We launched a pilot event here in Salt Lake City, and we had great reception to that. Taylor Gorley is the creative mind behind this one. We expect the average revenue per participant to be around $90 on this event. At the high end, probably around $135, but what that would include is that the participant actually gets to keep the trike, which is the 3-wheel, big wheel, like bicycle. And the thing that's so great about that is I think the retail cost is somewhere around $165 for this event. If the participants bring their own 3-wheel trike, then the cost is going to be around $35. We're hoping to host at least 2,000 participants per event. I think St. Louis and Vancouver will be the first host cities for this. And we're going to focus here in North America initially, and then we're going to look to future expansion in international markets via a franchise system. So I kind of touched on it earlier, but if we move on to slide 13, you can look at our growing fan base here. So I think as of now, we're probably approaching around 500,000 likes on Facebook for Slide the City, close to 300,000 on Dirty Dash. I think we're just under 2 million at this point on Color Me Rad. and Lantern Fest is experiencing steep growth as well as far as social media followings. The websites are receiving a tremendous amount of traffic. In most markets that we go into, we're receiving local TV coverage, newspaper coverage, bloggers. There's always a lot of excitement around these events. Moving on to slide 14. Expanding global franchise network, driving revenue growth and reducing seasonality. So, as you can imagine, Slide the City, it needs to be warm because it's a water slide. So one of the things that that we're doing to kind of even out the seasonality is expanding through franchise agreements, often in the southern hemisphere or around the equator where it's always warm. So we have franchise agreements in China, South America, as distant as even South Africa. Recently, we signed a license agreement with O2 Concepts, which is one of our existing franchisees that hosted, I believe, our Hong Kong event, and they're anticipated to bring Slide the City to an additional 5 major Chinese cities this year. So we're projecting about 45 to 80 events that will happen on an international basis this year. Slide the City was really well received by our Malaysia franchisee, and they're expecting to host an additional 6 events in 2016. The 2-day event, and I believe the last quarter of 2015, sold out with 8,000 plus participants. I believe in the last quarter of 2015, we signed a franchise agreement with Colombia as well. They're slated for 3 cities, and they have the ability to expand up to 9 cities. So moving on to slide 15. Another one of our subsidiaries is Green Endeavors. We own an 88% voting control in this entity. It currently hosts 2 Aveda lifestyle salons and an Aveda retail store. Aveda is a company that's committed to giving back to the communities in which it serves. All their products are manufactured with wind energy. It's a higher end luxury brand. In 2015, we grossed about $3.2 million in revenues. First quarter 2016, we're on track for just under $800,000 in revenues. And this year, it'll probably remain steady around 3.3, 3.4 in gross revenues. And we're looking to expand upon this business as well. Green Endeavors is its own public company. Moving on to slide 16. One of our core values is to make sure that we're being socially responsible, and it's very important as an organization that we give back to the communities that support us. So this is just a small sample of some of the good causes that we support. There's a list probably of 50 more. Moving on to slide 17. So look at the projected financial performance. Yeah, we expect nearly 100% increase in revenues. EBITDA, we're on track to hit close to $4 million, and we should see a dramatic increase in net income in 2016. So kind of to recap on slide 18, 2015 revenues up 121% year over year. So we hit $10.6 million. We are currently on track to hit $18 million in revenue in 2016. We have a solid team with proven operating experience. Some of those members came over from an acquisition that we recently completed in the fourth quarter of 2015. We're building upon an impressive list of corporate sponsors. We have sufficient credit to further expand in 2016. Sack Lunch Productions is receiving a tremendous amount of third-party media coverage. The foundation of our participation as a database of email, social media followers that's in the millions. It's a large fragmented market that we hope to further take advantage of through acquiring other innovative event production companies or create additional innovative events. And we are on track to launch the newest of our events called Trike Riot, along with our sponsor, Razer. So I'd like to thank everybody for tuning in today. And if you have any questions, I'd be happy to take them.
Okay, we're now ready to open the line for our Q&A session with Sack Lunch Productions, the ticker symbol SAKL. And for the Q&A today, we have Richard Serber, CEO. Welcome, Richard.
Hey, great to be here.
Very happy to have you. We'll just jump right into the questions here. Our first question, can you talk a little bit about the seasonality that's associated with some of your events?
Well, Fly the City is a predominant warm weather event, so there is some seasonality with regard to that particular event. And you know, and all of the vast majority of those events happen in the hottest months of the year. So, and generally what happens, though, in order to kind of offset some of the impacts of, inconsistent cash flow, is that in January, for instance, we'll open up, you know, a limited number of markets to those people that have participated with us in the past, where they have the opportunity to buy cheaper tickets. So what we've done as well is we've set up a franchise system on an international basis, and we're focusing on increasing the number of franchised events in the international markets, particularly in Asia, and then also in some of those regions, you know, that are close to the equator in the southern hemisphere, to further help offset some of the seasonality effects of Slide the City. And then in addition, we've brought in, you know, other events that aren't as seasonal, like Lantern Fest, for instance. So a lot of those events are allowed to occur, you know, all the way up to late fall and into early spring. So as a result of, you know, how those two events interact, and then you throw in some of the more traditional events like the Color Run and Dirty Dash, the Color Run as well. You know, a lot of those events can start early spring and go into late fall as well. So I think we've done a pretty good job at basically being able to get consistent cash flows coming into the company on a year-round basis as a result of our event offerings and focusing on franchisee revenues as well.
Very good. Thank you. Thank you, Richard. And you were just talking a little bit about how the international expansion can offset some of that seasonality. But can you talk a little bit more about the international expansion in general, and where right now are some of your events being held internationally, and what are your biggest markets?
Well, I have to say a lot of the biggest markets for Slide the City and Color Me Rad are in Japan, China, and Indonesia. And the population centers in, you know, a lot of those cities like Hong Kong, Tokyo, Hiroshima, and a pretty long list of other cities. The population density is such that a lot of the events end up being carried over as two-day events because we essentially max out. So that's what our solution is with regard to when we go into high population density places. So just kind of give the listeners an idea. So, and these are tentative as well. We just signed a franchise deal that involves Color Me Rad, with a very reputable operator out of Japan. So they've given us a tentative forecast of what that's going to look like. So they're going to be in Miyagi, Fukuoka, Ibaraki, I'm probably not pronouncing some of these correctly, Hokkaido, Shiotsuka, Kyoto, Aichi, Guma, Hiroshima, Miyazaki, and Okinawa. And then Malaysia, I think we have probably, I think they have 8 different markets opening there. We're starting to focus on some of the South American markets, as well as Mexico and Central America. Slide the City, has franchise systems in as far away places as Australia and South Africa as well. So there is plenty of runway for growth with regard to increasing number of franchisees and those franchisee revenues.
Okay, thank you, Richard. Can you talk a little bit about your sponsorships that you have? You've had a lot of big brands sponsor some of your events. Can you talk a little bit how you get revenue from that and where you see that growing over the next couple of years?
Well, one of our largest sponsors here domestically is CBS and some of the larger radio stations, and they've played an integral part in helping us successfully kick off Slide the City and some of our new events when they make their debut in a lot of the cities. And essentially what happens there is they act as a lead sponsor, and they go out and find sub-sponsors in order to fund it, and they give us a tremendous amount of news coverage in each one of those markets, which has helped jumpstart a lot of those events. But if you look to some of the international franchise sponsors, generally what happens with regard to those is we under the franchise agreement we get 20% of whatever those sponsorship dollars that come in through the franchise system. So one of the bigger and more notable ones that came with a Japanese franchisee was Sprite. That was a very large sponsorship for them. And then coming into Hong Kong, there was Hong Kong Airlines, Nestle, and a whole other list of sponsors. And then more of a local level, domestically, we work with, excuse me, a lot of local companies as well. Where we're looking to be is probably, we're hoping to probably triple the amount of sponsorship dollars coming in our way, coming into 2017 as we get everything smoothed out. It should be a major source of revenue, in 2016, but probably more so in 2017.
Thanks, Richard. Can you talk about, this next question moves more into the financials. This investor noticed that there's significant amounts of deferred revenue on previous balance sheets, and they're wondering how this correlates with your reported quarterly revenue.
Well, like I discussed earlier, a lot of times what happens is we open up markets for sale, sometimes at steeply discounted prices, well in advance of those events occurring. So under GAAP accounting, just because we take that cash in doesn't mean that it's our revenues. We only get to recognize those revenues after we perform the event or the service that's tied to those revenues coming in. It's much like how gift card revenue is booked. So that's the reason why when people see first quarter, they're not going to see a ton of top line revenues in there. What they're going to see is a big liability on the balance sheet showing all the revenues that come in. And then when third quarter hits, our biggest quarter, is when, you know, most of the Slide the City events and a lot of other events occur. Then they'll see a substantial spike in the number of revenues, and virtually all of those deferred revenues come off of the balance sheet, and they're no longer a liability there. So it's just the revenues are able to be recognized when we actually hold the event and provide the service to our participants.
Thank you, Richard. The next question, this investor would like to know what percentage of customers from previous events typically participate in new events through your marketing initiatives?
You know, I mean, it's varied greatly with regard to some of the more seasoned events. And some of the more seasoned events are the Dirty Dash and Culinary Rad that we just acquired, you know, on April 7th. So, and then of course the Lantern Fest and Slide the City has only been around for 1 year. So, I really don't have an answer for that right now until we have at least another year worth of operations, you know, under our belt. What we'd like to do though is to retain at least 60 or 70% of those prior participants, you know, as we move forward. That would be kind of a utopia situation.
Absolutely. The next question, can you talk a little bit about the expansion that you're actually, I think I've planned 256 events for 2016. What does your funding look like as far as being able to execute on running all those events?
Well, the thing that's great, you know, about these events is that we can open up sales well in advance of the actual event occurring. So we're always having dollars come in the door. So the way everything is looking is we pretty much self-fund. We haven't really had to reach outside of the cash flows that are coming in the door in order to fund future events. And you didn't need to, out of those 256 events as well, you know, 156 of them are corporate, and the remainder are on the shoulders of the franchisees. But in the off chance that we did have an interruption in cash flows or something of that sort, in the fourth quarter of 2015, we signed a secured line of credit, and we can draw up to $5 million on that line of credit. The initial draw is $1.8 million. As of today, we've probably paid that line down about $600,000 and we haven't had a need to take any more money under the terms of that particular credit facility. And in fact, what we're looking to do is find substantially cheaper money in order to execute upon an acquisition strategy and a development strategy for future events.
Very good. Sounds like you're in a great position, and we definitely look forward to hearing about the successes as you continue to execute over there. And I guess, Richard, one last thing for our viewers who are maybe interested in any of your events, where can they go to find a listing of maybe events in their area?
Well, if you go to sacklunchproductions.com, which is our parent company, from there you can, if you're looking for Slide the City, it'll refer you to slidethecity.com or thedirtydash.com or culinaryrad.com or trikeriot.com or thelanternfest.com. And there's a listing of hopefully an event, you know, near them.
Very good. Very good. And so for investors, again, you can access all those websites directly from sacklunchproductions.com. And of course, you can find out more information about Sack Lunch Productions right here at redchip.com. You can also sign up for news alerts on the company. There's a box right below the presentation window that you're watching right now. And that's the best way to stay up to date on the corporate progress of the company. The stock's been doing obviously very well this year. And with all the things they have going on, we expect great things to continue for the company. And with that, that was our last presentation for today for the conference. And we will actually have replays of all of our presentations available here in the coming days. So please visit back to redchip.com in the coming days and take a look at any of the presentations you want to catch a second time, or if you happen to have missed a presentation, you can catch those once we have those archives up. And again, I want to thank everyone for joining us at day 2 of the RedChip Global Online Growth Conference, and we look forward to having you back in a few months at our next conference.